Exports are probably the best thing the Chinese economy has going. But at what point does the weak renminbi become too weak or become a problem for Chinese policymakers?
Yeah, I think certainly if we are talking about something above the 7 handle, it would definitely deliver a psychological impact to the extent which the market could be suspicious about a disorderly devaluation. So I think where we are trading right now, which is 686, close to 690 level, there has been no indication by the PBOC that this has become a disorderly move. And therefore, I think they are likely to just let it run for a bit. I think it is a matter of days or weeks before we get above the 6.9. But towards the 7 handle, I think the PBOC might actually get a bit cautious about trying to spook the markets too much. And I think I would expect pretty strong stabilization measures when we get close to the 7. I think they might actually hold it there for a while. And hopefully in the coming months, when the dollar cycle starts to stabilize as well, if we do get, for example, US inflation ebbing nicely, and the market starts to step back a little bit on the Fed pricing, then I think 7 might just be a near-term cap for dollar China, and hopefully we don't get past that big level.
So let's bring in dollar, Teck. I mean, obviously there are going to be domestic pressures on renminbi because of easing policy. But from the U.S. side, we're lining up for Friday. Jackson Hole, Fed Chair Powell, who is likely, we're hearing, going to have to come out with a narrative that, look, if you think the Fed is going to ease back or even pivot, you are absolutely delusional. He's going to have to hammer that home. If that happens, that's going to put external pressure on renminbi as well through a stronger dollar.
I would say that it has already played out, given that many of the Fed officials has been aggressively pushing back on the market pricing. So if Powell does deliver that as expected, I don't think it offers additional impetus for the dollar. And if you look at the rates pricing, the interest rate markets has already went from, say, expecting 50, 60 basis point cut in 2023 to now only pricing in about 30 basis point cut. And I think it is also important to disentangle that the market pricing of cuts next year, it is not just about expecting inflation to subside. It is also about growth risk. So I think there is nothing unusual about the market pricing. And therefore, cuts could be reasonable if you do get inflation slowing down and growth slowing down as well. It just takes time before we get the inflation trending the way that the Fed wants it to be. So just on the Jackson Hole, I think ahead of the event itself this Friday, a lot has already been priced in. So if he delivers an expected hawkish message, it might not actually move the needle on the dollar from here.